I'm doing this like for the very first time in my life. So my purpose here is to really venture into some accounts, some high school accounts, that's principle of accounts, right? My aim here is to aid students who desire to be much better at practicing accounts and understanding the concepts. I'm a final year accounting student. I know a few stuff. I did accounting some years ago, and I can understand that it really takes practice to be better at this. And I'm just offering my assistance, even though I still have school. So within my time, if it is possible, that I can assist anybody who is studying accounts, who needs some assistance with understanding certain concepts. I'm here to help if I can help. So we're going to find out as much as possible how much I can help. And yes, let's just have some fun doing some accounts. So essentially, accounting is the recording of financial information. It is the recording, the analyzing, the interpretation of financial accounts. And what CSEC is looking for, CSEC is looking for your how to apply the principles and understanding of accounting concepts and principles, and how you interpret the accounts. I've been looking at the CSEC syllabus. I'm not a professionally trained teacher. A matter of fact, I'm one of those persons who is kind of a slow student, so I can concur with some students who learn the concepts a little bit slower. And for those persons, I must advise you that you have to spend so much more time in practicing, in reading, in seeking for assistance, because that's how I became a little better and even more. I remember when I was in high school, primary school, very slow. Not that I couldn't learn, but after the teacher leave the very simple stuff and enter into like more difficult concepts, it was more harder to grasp, and teacher basically lost me after a certain time in school. And I was one of those persons in class who like asked a lot of questions, some foolish, some make sense, which helps some persons in the class, but it helps, right? Just be yourself, know your weakness, know where you need help, and just seek out that help. So we're on the first topic. It says introduction to principles of accounts. Right. Let's just pray and ask the Holy Spirit for guidance in this. Alright, Heavenly Father, thank you for your mercies and your grace. Thank you for the ability to learn, Lord. I ask that for this first venture, dear Jesus, I pray that it will be successful if it is that it is a part of your will. I pray that the presentation will be easily understood by persons who want to know more about accounts and be able to put it in full practice and do better, and also to improve what they already know. Lord Jesus, may come off as clear, and may their skills be improved, and may they see better results. Thank you for your grace and your mercy. For Christ's sake, amen. Alright, let's go into the matter. Alrighty. I'm reading from this book that I used in 2015. It says Principles of Accounts, 5th edition. I've not been to high school or connected to anybody who has been doing accounts since. I know persons maybe 2 years ago used the book. I don't know how much relevant it is to today's CSEC account. I know it will still really help, but I don't know if you have a 6th edition or another one. But we're going to use this for the time being until I'm more abreast with what's happening. So we're teaching some accounts. So it says the aim of a business. Now, everybody who enters a business or enters business, whether it's just a sideman on the road, everybody enters business to make money. But not just to make money, because in the business, when you venture to a business, you actually put in money, so you expect a return or a profit on that money. Right? So the aim of any business at all is to see profit, to see an increase on what you put in the business, basically. So all businesses are started with the intention of making profit for their owners. To achieve this aim, it is vital that strict control over money is carried out. And so accounting is more than just recording financial transactions and all of those. It's all about understanding these principles and concepts, but also understanding where the weaknesses lies in the business, so you can fill those gaps. So this is where control come into play, right? So this can be best illustrated using a straightforward example, such as a market trader who buys and sells goods. Now, such a person would operate his or her business as shown in Exhibit 1. Now my technology is WAC, so you are not going to be able to see this according to how I love for you to see, but as things grow, we'll see how better it gets. For instance, like me, just work as a regular administrative assistant and I get a salary. Say I'm going to invest some of my salary in a business. I'm going to start something for myself to see some other money other than salary. So I use $20,000 worth of my salary to buy some clothes. So I'm gonna sell downtown, right? So I buy the clothes downtown, buy goods for, well, maybe I buy them online, because you're gonna get them cheaper if you purchase them overseas. So the goods cost $20,000. No, that's the amount I would have invested in the business, and that's what you call capital. That's what the money the owner used to start up the business, right? That money comes from the owner, and we get more into that with the accounts. So me now, taking into consideration that I buy the stuff online, when they come, I have to clear them on the wharf. I probably have to pay shipment, and I have to pay the duty fees and all of that, dealing with custom agency. So take into consideration the additional costs, plus costs for me to go downtown and come back home, plus costs to probably buy lunch to eat. So round up that come up to another $10,000. So the cost for the goods would naturally be $30,000, right? So as smart accountants and as smart business persons, we're to take into consideration in order to absorb all the costs, so we can really see the profit clearly. And I think that's some of the issue today with small businesses. I mean, you say, okay, I buy the goods for $20,000, and so I want $10,000 and I sell it for $30,000. But you're not taking into consideration, say you have to pay Mr. John to drop off the chicken run and Mr. run of the vendor yard, right? So those are some of the things that we have to really think about. Okay, so as I was saying, as a good salesperson, you take into consideration now my goods cost $30,000, right? So then I can smartly see how much markup is. Simple. You just want to know what the goods cost, so we can make a profit. Say, alright then, me go sell it. I want a $10,000 for it because I think we can make 10 grand based on what I say I go on. Okay, so you sell it for 40 and then your return would be $10,000. So yes, that's the smart thing. In ascertaining the profit, there are established procedures which need to be followed, namely bookkeeping and accounting. It should be realized that a poorly performed business can show a loss. So a poorly performed business means that it's not being managed properly. And when I talk about management, not just managing the daily activities of the business, but also managing how the money is being spent, where the money is being spent, and what measures are being put in place to ensure that the money is being spent properly and the right places, so you can get enough return and that the calculations are being done right. You're taking everything into consideration. So if that situation is not remedied, where the business is managed poorly, your business will naturally cease to exist. You can stop selling chicken. I mean, if you're just a chicken person who loves to sell chicken, you might really be selling chicken for a lifetime, but you're really not seeing any profit out of selling chicken. So what is bookkeeping? Bookkeeping is just as how it sounds. It is bookkeeping. Keeping the books of accounts, recording, writing down. Alright? So bookkeeping is a process of recording in the books of accounts, or by using a computerized accounting package. So nowadays you have the different softwares. You have Sage 50, I think that's the whole one. You have P3, similar to Sage 50. QuickBooks is the newer one, which I think I need to acquaint myself with. Anyways, so in other words, it simply means keeping the books of the business. Everything happens, you write it down. So bookkeeping, think about it. Book, when you're at school and you're writing down, you're basically recording what's happening at school when teacher teaching, right? It is the first stage in the accounting process. Now, accuracy in bookkeeping, you have to ensure correctness, accuracy. So you're writing things exactly as they have happened. So this is a crucial stage. If you make errors here, the errors will be shown in the end result. So you want to make sure that the information recorded here is accurate. So the persons working in this section are very focused and they are doing the job correctly. So any account, any errors here that occur may be difficult to find at later stage. So the best place to find the error is in the early stage, and it can have a significant effect on the financial statements. That's the latter part of the accounting process. Therefore, it is important to take care in entering data initially to ensure complete accuracy, right? So you have to have persons who are very meticulous, who working in this stage, who pay attention to detail and are just focus on what they're doing to have the recordings accurate and correct. What is accounting? We said it already. It is recording, it's the analyzing and interpretation of financial data, right? So the book is saying, once the bookkeeper has entered all the information, so remember we're keeping the books in the system of accounts, it is made available to an accountant. The accountant will then present this information in the form of financial statements. And the financial statements, which we'll do later on in accounts, you have the trading and profit and loss, and you have the balance sheet. These reports are then used to aid financial control and management of the business. So these are what management use to identify where the weaknesses are in the business. These are what present management with the information they need to put in control in place or to strengthen control measures that they already have in place. Right? So this involves analysis and interpretation of financial statements, forecasting, and budgeting. So analyzing meaning comparing the information, right? Interpretation, no. This comes with an understanding of accounts, right? So with interpretation, it helps you to understand the numbers, what exactly is happening. And forecasting and budgeting, meaning to set plans for the future. So they also use financial statements to set plans for the future, whether they should expand, the importance and the need for accounting. So business must operate profitably, otherwise they cease to exist. So any sensible business person must ensure that their business is operating on a profit. The financial statement produced by business accounting department aim to show clearly the profit and loss made by the business. So we mentioned the statements before, the trading and profit and loss, which show your trading section, and your expenses, which shows whether you get a profit or a loss from what you're trading on, and you have the balance sheet, which shows the position of the business. That's the financial position of the business, and we'll get into that later on. So both of these statements are checked by auditors as part of a legal requirement of correct financial reporting. So you generally hear about the Jamaica Stock Exchange. Persons who are listed on that are required by law that their financial statements are audited. So auditors, those are persons who operate independently and can give an independent review that these statements reflect a true picture of what is really happening in the business. So that's what auditors do. So the auditors stamp the approval on the financial statements. So in producing these financial statements, the business must follow certain accounting procedures and practices. So there's a particular sequence in getting the accounting information out. So we talked about bookkeeping earlier, right? Recording the financial. So each business must install a system to collect and record the data that are carried out. So you classify the data, you put it in different sections. One data has been recorded. Once it has been recorded to be classified, it has to be classified so that the business, it can be useful. For instance, if a leisure business sells both sports equipment and camping gear, it would be at value for the proprietor to know the sales figure of both. So you can differentiate the different aspects of the business. And then you summarize all of that information, and then you'll be able to communicate the information to the different users of the financial statement. So the financial reports and statements produced by this process are used by owners and managers to monitor the continual its viability. So you want to know if the business is viable, if it will live, if it will sustain itself, if the business which, like any business, will go on for a foreseeable future. Yes. All right. So the users of the financial statements. Now these are different persons. The Inland Revenue Department. So this is government basically. Right? We talk about the TAD, Tax Administration Jamaica. It's collect employees and business taxes. Right? So they want to ensure that the company is compliant with all of these. Investors. Now if I invest in your business, right? Investors are persons who buy part ownership of the business. Now these persons want to make sure that the company is making a return so they can receive their little stash. And later on you learn out what they receive is a dividend or they get an increase on the share price. Right? So these are private individuals, companies, banks, and any person who want to monitor the performance of a business to ensure that they will get a return on their investment. Suppliers. No. Many people do business, but they do this on credit. So the suppliers are persons who supply with goods and services. These persons want to have the confidence that the company is capable of repaying them, because many of these people purchase on credit. So the people who supply your goods want to know that you'll be able to pay them back, right? Customers. No. What interest a customer want in understanding the viability of a business? To understand, yeah, we're gonna get discounts, we're gonna get they want to ensure the financial stability of the business before placing orders. That's vital, right? Next thing me go order from you and then find out say you're supplying and supplying a good if you're doing business poorly. And employees is another important one. Now, can you imagine working for a business that's doing poorly? You are uncertain of a salary for month end, right? So employees, a sound business with a good working environment will help keep employees' moral high, right? So you keep them motivated and you'll be able to attract people of high caliber, people who have a high working stature, good work ethic, they are very skillful, and they come with a whole diverse set of abilities and skill set. So remember the different users of the financial statement. We talk about government, the Inland Revenue Department. We talk about investors. You have the suppliers, and you have customers and your employees. So those are the users of financial statements that you need to acquaint yourself with for this time. So just a strict review, we talk about what is accounting, and we say that accounting is the recording, the analyzing and interpreting of financial information. And we talk about this says accounting information. We talk about this being done in the first stage of accounting, which is bookkeeping, which just writing down or recording the financial transactions of the business. So this is the original stage of the account, and we ensure that we iterate that this needs to be accurate and complete so that you won't have any issues in the end results, which is the financial statements. And we said that these financial statements are the trading and profit and loss and the balance sheet. So the trading and profit and loss is one statement, and the balance sheet is the next statement, so that's two. Also, we says there's a sequence in getting to the trading and profit and loss, which says that you record the financial data, right? So there must be a system in place to ensure that you're able to collect this information, you classify the data, meaning that you are able to differentiate the different aspects of the business to tell where you're earning and where you're making a loss, if any. Summarizing that data, meaning you put it in a more concise form and meaningful way, and you communicate it with the different users of the financial statement, which we establish as the government, customers, investors. Yeah, I'm looking back at them. Brain not working. Investors and employees. So you do that for now, and the next time we meet, we will look at the different types of business organization. Right? So see you next time.